Good morning, Steve here in Chicago with the Morning Grain Comment. Well, it's Friday and hope everybody has a happy and safe weekend. Overnight, we've got grain prices a little bit higher. We've got crude and gold a little bit lower, and the dollar's a little bit higher. As far as grain prices are concerned, yesterday there was talk that China came in and was an aggressive buyer of U.S. soybeans for the October, November, December timeframe. There were also some rumors that they may have bought some wheat, and they may have looked at and asked for prices for U.S. corn. There's definitely a lot of articles being printed right now about how in China COVID may be behind them and that their economy is actually starting to grow. So their demand for raw materials like grains and energy could be increasing. This is over and above any phase one trade talks. This is stuff that they actually might need. The question mark is, like beans, is this just buying what USDA already has plugged in for an export number? For corn, I don't know if it's quite enough to increase total exports and drop the carryout enough to move prices higher significantly. But for wheat, especially hard red winter wheat, last year's crop was smaller, and any purchases, big purchases of U.S. hard red winter wheat certainly would tighten the Kansas City hard red winter wheat supply and demand outlook. As far as weather is concerned, the maps are pretty much in agreement that next week the U.S. Midwest is going to see some rain. There's quite a bit of divergence between what the models say and what some of the forecasters are estimating. First of all, it looks like some people think that we'll get 65, maybe 75% coverage of a half to an inch and a half rain, maybe locally heavier. But the models actually show 80% coverage of somewhere between half to 2 inch with local amounts 2 to 5 inches in parts of southern Wisconsin and northern Illinois. The only area that might miss out on this rain event is parts of eastern South Dakota and maybe southern Minnesota. So again, there is rain in the forecast, and we'll just see how much we actually get. The Pro Farmer Tour found a lower corn yield than average, a higher Minnesota corn yield than average, and soybean pod count continues to be higher than it was last year and average, suggesting a big soybean crop. So the big thing is how much Iowa corn has been damaged by the straight line winds and the dryness. Some people think that the Pro Farmer yield for corn might be a little bit lower than what the actual yield is. And Pro Farmer will come out today with a U.S. corn yield, and the market will probably trade that depending upon where it is versus expectations. So funds yesterday, they pretty much sold the bean complex and they bought wheat. And right now we show them short 116 corn, 20 meal, and long 54 beans and 60 soybean oil. So in general, I think that assuming normal weather from here on out, the U.S. corn, soybean futures prices should leak lower and wheat should probably follow. Globally, Black Sea wheat prices are soft, looking for export demand, and down in Brazil, the fact that their currency moves in favor of the farmers suggests when they do start planting the 21 soybean crop, they will increase acres. So we'll be watching China demand, we'll be watching this rain event in the U.S., we'll be watching any political news, any news on the COVID, and the impact it might have on the economy and demand. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day. And remember, changing tomorrow starts today.